Hello students, today let us learn about various disputes that crop up in the insurance business. The objectives of the lesson are to provide knowledge about insurance business, various disputes arising out of the insurance contracts, discuss various platforms for settlement of insurance disputes and grievances of the insurance policyholders, explain the process of settlement of disputes between the insurance companies and insurance policyholders, and enlighten the students on formation and establishment of dispute settlement bodies. Insurance business and objectives of the law. The insurance business is a people-centric. The Insurance Regulatory and Development Authority of India, the apex regulatory body of the insurance industry, endeavors to protect the interests of the people who consume the services and products offered by the insurance companies registered with it. The insurance contract being the standard forms of the contract designed and drafted by the insurers, and policyholders suffer because of conflicting nature of interests of the parties concerned. The prime objective of the insurance law and regulatory mechanism is to protect the interests of the policyholder, that is insured, create transparency in insurance operations, and build confidence between the parties of the insurance contract and promote orderly growth of the insurance industry. The insurance regulatory mechanism is an effective tool on safeguarding the interests of the insured. The Insurance Regulatory and Development Authority (IRDA), established under the provisions of the Insurance Regulatory and Development Act 1999, is the watchdog protecting the insured's interest. Insurance disputes and grievances. The dispute insurance business may arise because of non-performance of the contracts or non-compliance of the terms of the contract, or otherwise, such as extending or narrowing down the meanings used in the contracts. Sometimes they may be result of external or internal factors of the business environment. Whatever may be the reason, the result will be adverse impact upon the insurance policyholder and his claims settlement. Many times the claim may be repudiated or settlement may be delayed, resulting in disputes and grievances. The disputes land the parties onto various problems and disrupt the relations between them and end up in litigations. Litigations are non-productive on the business arenas. The litigations with their complex and cumbersome procedures deny timely justice to the policyholders. Under these circumstances, the policyholders looks towards simplest and easiest model which can deliver the justice on time. Insurance dispute resolution. The Insurance Ombudsman and Consumer Forum are the available alternatives in place of traditional litigations in the wake of overburdened justice system. They are established with an objective to protect the interests of the insurance policyholders and also provide effective and faster redressal mechanism. The Ombudsman is established by the IRDA with an objective to resolve all complaints relating to the settlement of claim on part of the insurance companies in cost-effective manner. The consumer commissions are established under the provisions of the Consumer Protection Act 1986 with an objective to provide for better and cheaper protection of the interests of the consumers. Insurance Ombudsman. The Malhotra Committee, appointed in 1993 on insurance reforms, has recommended for the creation of a specific body to settle grievances of the policyholders, as the existing mechanism was not enough to help the growing number of policyholders and complexities arising out of the privatization of the insurance business. Based upon the recommendations of the committee, the central government, with the powers conferred on it by Section 114, subsection 1 of the Insurance Act 1938, established a grievance settlement mechanism. The Insurance Ombudsman, by formulating redressal of Public Grievance Rules 1998 by a notification published in the Official Gazette on 11/11/1998. The Insurance Ombudsman is a policyholder-friendly institution established with an objective to resolve all the complaints relating to the settlement of claims on the part of insurance companies in a cost-effective, efficient and impartial manner. The Insurance Ombudsman is a powerful tool in the hands of the policyholder to settle their grievances. The Ombudsman, by the mutual agreement of the insured and the insurer, can act as a mediator and a counselor within the terms of the reference. The decision of the Ombudsman whether to accept or reject the complaint is final. The nature of the award of Ombudsman is compensatory in nature to meet the losses suffered by the party. The Ombudsman has a right to award ex gratia payments also. The Ombudsman should be of the rank of High Court judge and or should have a rich experience in the industry, civil service or administrative services, should not be more than of 65 years age. The term of office for an Ombudsman is 3 years, after which he is eligible for reappointment. An Ombudsman can be removed from the office for a gross misconduct. The Insurance Ombudsman has its territorial jurisdiction as that established at 12 different locations of the country. The Insurance Ombudsman has a pecuniary jurisdiction of Rs 20 lakhs. The Ombudsman may consider or and receive complaints of grievances of the insured in relation to the policy purchased and the claims made by them, partial or total repudiation of claims by the insurer, dispute with regard to the premium paid or payable, dispute on legal construction of policies insofar as such disputes related to the claims, delay in settlement of the claims, non-issue of insurance policy documents even after the premium is paid. The policyholder in his individual capacity, either directly or through an agent, may file complaint to the Ombudsman on all matters relating to the insurance policy, particularly when his right to claim is infringed or when the insurance company has any dispute in calculating the premium payable or legal construction of the policy. The policyholder may also make a complaint when their interests are in jeopardy because of delay in settlement of claims or issue of the policy document even after the payment of premium. The complaint made to Ombudsman should be in writing, signed by the insured or his legal heirs, addressed to an Ombudsman within whose jurisdiction the insurer has branch or office, about complaints and settlements, supported by documents if any, along with an estimate of the nature and extent of the loss to the complainant and the relief sought. The policyholder or the insured has to make representation to the Ombudsman only after request or representation is rejected by the insurance company. In other words, the insurer should first bring his grievance to the insurance company's notice, and on failure to get justice within the prescribed period of 1 month, he can make a complaint to the Ombudsman. The policyholder has to make a complaint within a maximum period of 1 year from the date of rejection of his representation by the insurer. The policyholder may also file complaint even after 1 year when the subject matter is pending before any court of law or consumer forum. The other interesting feature of the Ombudsman institution is that even the insurer can also file a complaint for settlement of the grievances against insured. The procedure required to make complaint is very simple and cost effective, as the complainant has neither to pay court fee nor engage any legal professionals on his behalf. The maximum time limit for settlement of the grievances will be 3 months. All the complaints made to the Ombudsman should be settled within a period of 3 months. The award granted by the Ombudsman has a legal binding. The policyholder may avail the service of the Ombudsman in different formats and for the protection of his rights at different phases of the dispute, as the Ombudsman acts as a counselor or mediator in matters of which are within his terms of reference. The Ombudsman recommendations. The Ombudsman recommendations are valid only when both the parties agree on the decision of the Ombudsman. The copies of the recommendations should be sent to both the complainant and the insurance company. The recommendation should be made not later than 1 month of the receipt of such complaint, and the complainant should accept in writing within 15 days of receipt of such recommendations. A copy of acceptance letter by the insured should be sent to the insurer, and his written confirmation should be sought within 15 days of receiving such acceptance letter. The rules governing the awards. The Ombudsman pass an award to the insured which he thinks is fair. In case the parties do not agree for the decision and not communicated to him about non-acceptance, the award passed should not be more than what is necessary to cover the loss of the insured and should not be more than Rs 20 lakh inclusive of the ex gratia payment and other expenses. The award should be made within a period of 3 months from the date of receipt of such a complaint. The insured should acknowledge the receipt of the award in full as a final settlement within a 1 month of the receipt of the such award. The insurer shall comply with the award and send a written intimation to the Ombudsman within 15 days of the receipt of such acceptance letter. The Ombudsman has to act fairly, equitably, without any interest in the subject matter, and should prepare a report of his activities every year and report the same to the central government. Insurance Dispute and Consumer Law. The Consumer Protection Act 1986 is enacted with an objective of providing simple, speedy and inexpensive redressal to the grievances of consumers. It is applicable to all types of grievances relating to all types of goods and services unless specifically exempted by the central government, and also covers all the sectors, the private and public sectors. The primary condition for application of the consumer law is that all the services and goods should be consumed either on payment or on agreement to pay the consideration in future in installments. Insurance policyholder is a consumer of insurance services as he purchases the insurance policies from the insurance company to protect the economic value of the asset or the life of against the risk of loss. The Consumer Protection Act 1986 states that consumer means any person who hires or avails of any services for a consideration which has been paid or promised, or partly paid or partly promised, or under any system of deferred payment, and includes any beneficiary of such services other than person hires or avails of the services for consideration paid or promised, partly paid or partly promised, or under any system of deferred payment, when such services are availed of with the approval of the first mentioned person, but does not include a person who avails of such services for any commercial purpose. The insurance service is covered under the provisions of the Consumer Protection Act 1986. Thus, the provisions of the Consumer Protection Act 1986 cover the insurance business, and the policyholder, being the consumer of the services of the insurance company, can invoke the provisions of the Act provided that the policyholder should avail the services of the insurance company relating to the insurance product or related areas. The policyholder should avail the services for the value consideration and not for free, or should not have contract of personal services with the insurance company. The insurance being a prime component of the financial services, every person who hires or avails the insurance services for valuable consideration and any beneficiary of such service under the contract is considered as insurance consumer. The consumer law provides protection to all the insurance consumers who avail the services from the insurance companies when the services suffers from the deficiencies and defects. The term defective is strictly applicable for the goods only, and if the policy is wrongly drafted, it is covered as policies with defects. The policyholders may seek protection under the Consumer Protection Act 1986 when the services of the insurance companies have deficiency, and deficiency means any fault, imperfection, shortcoming or inadequacy in the quality, nature and manner of performance which is required to be maintained by or under any law for the time being in force or has been undertaken to be performed by a person in pursuance of the contract or otherwise in relation to any service. The consumer is protected not only for the deficiency in services, but they are also protected against marketing of goods and services which are hazardous to life and property, against unfair trade practices or restrictive trade practices or unscrupulous exploitation of consumers. The consumer law grants right to the consumers to know about the quality, quantity, potency, purity, standards of services, costs and provide for mechanism to deal and settle with the grievances they suffer during the enjoyment of services. The insurance consumer is protected for wrongful information either from the insurance company or its agent. The policyholder may face many issues in the services provided by the insurance company and has a right to approach the consumer forum and commission established at different levels. The Act established the quasi-judicial authorities at district, state and national levels to deal with the consumer grievances. The procedure and grievance settlement mechanism is simple, cost effective, speedy and efficient. The Supreme Court of India has the appellate jurisdiction upon the awards granted by the National Consumer Council and matters of legal interpretation. The insurance policyholders may seek protection under the consumer protection law against any kind of dispute related to the settlement of claims, formation of a contract or exercising of the rights of the parties. The disputes relating to settlement of claims include the repudiation of claim, delays in settling claims and not providing required information during the conduct of the proceedings of the claim settlement. The other types of disputes can be brought under the wider web of deficiency of services, unscrupulous exploitation and unfair practices. Thus, there is a wide open of issues and grounds on which the consumer may seek protection under the law. The following examples provide a glimpse of working of consumer councils and apex court while handling the grievances of consumers and invoking various grounds of insurance services amounting to deficiency of services. The Supreme Court of India in Motilal Naik versus LSA of India, AR 1962, SC 214, repudiating the claims with a plea of suppression of material facts of the case does not amount to the deficiency of services, but repudiation of claim without providing suppression of facts amount to the deficiency of services was decided by the court in United India Insurance Company Limited versus MKJ Corporation 1996 3 CPJ 8 SC. Repudiating the insurance company on the basis of fraud does not amount to deficiency was decided in LSA of India versus Nalini Joshi 1994 1 CPR 465 and 466 National Commission. In this case, the insurance company has no obligation to refund the premium paid by the insured. Non-disclosure of facts relating to the insurance policy and risks covered under it amount to be the deficiency of services. It was decided in LIC of India versus Sushma Singh. The good faith is essential element of the insurance contract and the parties should exercise their part of good faith. Repudiating the insurance claim without making proper inquiries on the claim and analyzing the terms of the contracts amount to deficiency. Repudiation of claim based upon the conclusions made from the post-mortem report and other diagnostic reports vis-a-vis terms of the policy amounts to the deficiency of the policy. Refusal of the agents of LIC of India to receive the premium payment does not fall under the purview of deficiency of the services. Failure to pay the insurance claim amount to the insurance company's deficiency. LIC of India versus Chatur Behari Lal. Failure to pay the insurance claim to the assignee amounts to deficiency. However, the assignee should have an insurable interest in the goods insured and the policy assigned to him. Delays in payment of claims due to pending litigations in the court do not amount to deficiency of services, but delays in settlement without any acceptable reasons amount to the deficiency of services. It was decided in Motilal Meghwal versus United India Insurance Company Limited. Settlement of claims in general insurance contract beyond 90 days amounts to the deficiency of services. Failure to identify the insured amounts to deficiency in services. It was decided in Yumidilal Agarwal versus United India Assurance Company Limited. Delay in the settlement due to the negligence or delay in submission of reports by the insurance surveyor or delays in taking decisions on the basis of reports submitted amounts to the deficiency. Scaling down the insurance claims without reasonable explanation and acceptance of the claimant based upon the reports of surveyors amounts to a deficiency. It was decided in New India Assurance Company Limited versus Mahesh Kumar Nikhara. Payment of claims below the claim based upon the sound reasoning does not amount to deficiency. D. Kodandaramaswamy versus United India Insurance Company Limited. Repeating the claim under the motor vehicle insurance policies on a ground that driver is not having the valid driving license do not amount to deficiency of the services. It was decided in the National Insurance Company Limited versus Om Prakash Agrawal. The Act also defines and establishes the mechanism and hierarchy of consumer authorities empowered to deal with and decide on the disputes referred to them. The Act equivocally fixes the territorial and pecuniary jurisdictions to avoid confusions among the parties. It provides for appeals against awards granted by the authorities and imposes legal binding upon the parties. The consumers covered under the provisions of the Act are of wide range, and any individual who either consumes the goods or services of any kind for valuable consideration may seek the assistance of the consumer councils. The insurance customers have a right to seek assistance from the consumer councils as the insurance services are recognized as the part of definition included in the section 2 subsection 1O of the Consumer Protection Act 1986. The insurance disputes and arbitration. Insurance policies in most of the times contain the arbitration clause which provides for settling their grievances relating to claim settlements through alternative dispute resolution methods like arbitration, mediation, conciliation and negotiation instead of litigation. The parties may also opt for settlement of their claims through arbitration even though there is no clause to that effect. But the insured may face difficulties in handling the cases he is not aware of insurance operations. Insurance dispute and IRDA. Rule 5 of IRDA, Protection of Policyholders' Interest, Regulation 2002, imposes a duty upon insurers to have in place a proper procedures and effective mechanism to address complaints and grievances of policyholders efficiently and with speed. Every insurer has to establish a grievance cell at their offices to address the grievances and problems of the insurance policyholders. The IRDA has also established a grievance cell at its headquarters to facilitate the policyholders to file their grievances with it if they fail to get response or otherwise received the settlement and not satisfied with the result from the insurance companies for their complaints. The IRDA transfers the complaints received by it to the concerned insurance companies with the proper directions. The annual reports of the IRDA contains information about the number of grievances received from the public and private insurers, grievance settlement and disposed grievances pending with them. It is an unending process. The IRDA has no appellate role to play in the grievances settlement made by the insurance companies. If the policyholder is still not satisfied with the outcome of his complaint or has the patience to proceed further, he may knock the doors of the court by filing suits, which is complex, time consuming and cumbersome. With this, even if he wins the case in the court of law, it has no positive impact upon him because the delay in the accessing the justice might have killed his enthusiasm on one hand, escalated his sufferings on other hand. In order to improve the working of grievance settlement mechanism in the industry, make the corrections to the existing system for effective results, the IRDA appointed a committee to look into grievance redressal system of the insurers and suggest modification to the regulations for the protection of the policyholders. Under the provisions of Rule 5 of the IRDA, Protection of Policyholders' Interest, Regulation 2002, some of the insurance companies have established the grievances mechanism in addition to their own existing schemes such as Jalad Rahat Yojana. So far we discussed few of the available methods and mechanisms to settle insurance disputes. There are many other mechanisms which we have to discuss and use in case by case method.